commercial property purchasing structure, like what structure, what special vehicle that you are going to use. I am going to give an example in my personal circumstances as well as some of our clients that are purchasing it. So hopefully you will be able to understand what's the different structures available, and more importantly understand the basic concept of different putting into the structure. So if you have not purchased a commercial property, this video is going to be super helpful, and based on that then you can talk to your accountant and ask about the questions of which structure that you should be using when you are purchasing a commercial property. So if you want to know, then stick around. Hi everyone, welcome to my channel. In this video I am going to talk about commercial property structuring. First of all, a big disclaimer is that I'm not an accountant, I'm not a lawyer, so by all means always talk to your accountant or a lawyer about your structuring. That being said, let's start. If you invested into residential properties, perhaps the one or two or three whatever properties that you buy, mostly I would probably think about that you bought the properties in your own name or in your spouse name or in joint name, right? That's the common form of structure which is readily available, and you don't have to set it up and nothing needs to be done. In the just contract you put your name and the loan is in your name, loan everything, which is the individual structure, right? And in commercial property you can purchase that as well. There is nothing that is prohibiting not to do that, so you can do that in commercial property as well. The problem is that most people, what I have seen is that they do not buy commercial property in their own name, and including me as well. Like, I do not buy any of my commercial property into my personal name or my wife name or a joint name, nothing. It has to be in a structure. Now why? The first thing that I do is that I create a special vehicle or special structure. Now up until this year, which is 2026, I was doing a mixture of family trust as well as company. So I purchased property both in family trust as well as in a company. Now I'll just give you a quick rundown about why. Because in family trust, if we purchase up until probably now, what is happening is any profit that is making that trust, we can distribute that profit, because commercial property means is making money, it's making profit every single year, it is having cash flow. Then the cash flow can be distributed to me, my wife, and probably when my children they grow up, no, up to like when they become 18, then I can distribute them a portion of their, and the marginal tax rate is going to be used. So there's a huge tax benefit that we have, or up until now we have, in a family trust or in a unit trust kind of things, because the marginal tax rate. Now the government in 2026 proposing a tax reforms, and which making is very different or difficult to purchase property, particularly investment properties, into family trust. Why? Because what they are saying is that the family trust, we have to, like, whatever profit is making, it has to attract minimum of 30% tax on the trust level, and then that distribution go to a non-refundable 30% minimum tax to the individual level. So in other words, that individual level, if they go more than 30%, then they have to pay the extra, but if they go below 30%, there is no benefit. So that is making a very not so strategically good in order to purchase into family trust. So full disclaimer on that. So what it basically means that if I am planning to buy, considering my circumstances, I already purchased it, and this is what I'm thinking, I'm planning to buy commercial property, let's say I'll hold it for next 10, 20, 30 years, then my structure, plain structure would be company. There are multiple advantage and disadvantage in a company, right? In a company, the number one advantage is that it's a clean structure. You just go to like Australian business register and there, and you can just set it up the company. It'll immediately get the ABN, GST, everything, and you can do it, and it will cost you below $1,000. Okay, done. Once that company name and everything is done, then you can use that company straight away. It can be done within 1 hour, 2 hours time for sure. Now that's the first thing, the clean structure, easy to understand, and it is going to be simple as compared to the trust, because in trust there is a trustee, there is a family trust, there's a beneficiary, there's a lot of things that you need to understand. Okay, so why company? First of all, is clean structure. Government is saying, the way the tax reform is happening, they're saying, oh, no matter what, you have to pay 30%. Now if you are making money, you have to pay tax. You can minimize legally and all sort of things, but we have to pay tax, right? So the tax, what we can see is that any profit that is making, or cash flow it is making 30%, we have to pay it anyway. So and in company pays, let's say maximum 30% tax. It could be between 25 to 30. It depends on what structure, how big of that company, annual turnover and all sort of things, but generally 30% it is going to attract. So why would I create a complex structure in a trust and all, where I can do this in company? One of the disadvantage in a trust is that the money or the cash flow needs to be distributed at the end of the year. We cannot keep things in the trust. In a company, any profit, I'll pay 30% tax, but I can retain that profit in the company itself. And that's, for my circumstances, it's a big advantage. Okay, because I can create multiple other companies, multiple other commercial property I'm purchasing, and those are separate. There's nothing to do with. So separation is very important in my structure, and that's exactly I am doing, and I'll be going forward, I'll be doing as well. That if I buy, let's say, 10 commercial properties, 10 different structure, I already have like 3 family trust and the other 7 is companies. So that way that I can keep the profit, I can keep this within the company level, I can do these things in the, like, it's a separate, it's like a clone of me, and it's separate, it's a separate bank account, it has separate structure, and I don't have to bring the money every time to myself. Now, full disclaimer, look, I have income, I have other income, I have cash flow from different family trust, because I have commercial properties. So what basically means that I do not need the money from those companies' profit for my day-to-day expenses. Full disclaimer, right? So because I don't need that, that's how I would keep this, so that I can reinvest and I can make more on those companies. That's the advantage. Now let's understand one more thing about the strategy in a structure. When you purchase something in a company or in a family trust, the property, the loan that you are taking from the bank, that loan is not in your name. Because the loan is not in your name, loan is in the company or in the family trust level. That means, and if you are smart enough and if you do like this, you can set up a company, borrow money from a lender, and you pay the 30% and 70% you take. You can give the personal guarantee, that's fine if that is needed. Then you can set up another company, and then in that company another lender, and you can borrow more in that company. And then once this is done, then you can do another company, another lender, another borrower, and you can make more than. And this is a very important part for understand that when you purchase commercial property and when it makes money, means making cash flow, then there is no limit of how many companies that you can create, how many lender you can approach, and how much money that you can do. And this is saying that because of my personal experience. Of course, you need to look into your personal circumstances, but if you cleverly structure it, it is possible to borrow multi-million dollar, because you are buying something which is making money. Now think for a moment, like in terms of structuring, why would we not do that, where we would buy everything in one structure, which is our own principal, our own name, and then tie up with 5-6 properties, and then eventually then it's stuck just because one of the lender is saying that, oh, I'll give you 25 cents less interest, so bring everything to me, and then he just did that. I would challenge you, think about this. Of course, you talk to your accountant, mortgage broker, financial planner, and then take your decision. All right, last but not the least, what I would like to talk about the structuring is the asset protection. Now Australia is the highly litigious society, right? Like so many litigation happens. I don't want that just because somebody sues me, and as a result they can up for grab from all my assets. I do not want that. So, okay, what do I want? Because I have created separate structure, separate company, and the separate loan, separate property. For whatever reason you are suing me, or whatever reason you are suing one of the companies or one of the structure, the other structure, the other, my wife or the other properties or whatever is in my name or my wife's name or other company's name, those all are protected, because the corporate veil that says that, okay, just because I am the director, provided I have done these things legally, right? It's not like that I did some dodgy stuff, which is different. But assuming that I have done all these things properly, what basically means that if you sue one of the company, then your litigation is within that company itself. You can't touch the other companies, you can't touch my personal asset, you can't touch my other stuff. And then the vice versa is also, if you sue me, then you cannot touch any of my companies, you cannot touch any of my assets other than my own personal asset, and which is why I do not buy anything in my own name. So it's not only about just buying stuff, it's also about protecting yourself, and asset protection is a big thing for me, and I want to protect all my assets by having a separate structure. Now, whether it's a company, whether it's a unit trust, or whether it's a family trust, it's debatable, and with the tax clever strategies that we need to put together, and I have just explained that why family trust and why not family trust. I also said that why company and why not company. So in a nutshell, I am not going to buy any commercial property in my own name. I would going forward buy all my commercial properties through company, because the benefit in a family trust is very limited. It's become super limited. Like, you will still get some sort of a capital gain tax discount which you don't get in a company, but I don't need that because I am building it for not selling. So I'm buying something that I'll never sell, and if this is the case, then it is just doesn't make any more sense to purchase in a trust, because trust is complicated stuff, and also trust is only for 70, I think 80 years. After that you have to dissolve it. In a company, it can stay forever. You can set up a company today, and generation after generation after generation, you can change the director, ownership, whatever, and generation after generation after generation, that company is going to be. I hope you find these videos helpful and understood a structure better. For more information, talk to your accountant, talk to your lawyer and financial planner. They will be able to guide you based on understanding your circumstances. I'm just giving you my experience, and if you find these videos helpful, if you find this gives you some sort of trigger point, please like this video, subscribe this channel, so it actually motivates me to create videos like this. And more importantly, I can guarantee you that you get these videos straight away as soon as I publish them. Thank you so much. I'll see you next time. Bye bye.